don't think it's unrealistic at all to think that Bitcoin could 10x from here. The first thing that draws people in is price. And if Bitcoin 10x's from here in the short to medium term, then you're going to get a lot more activist shareholders saying, why don't we have exposure to this? That's the point at which the career risk flips, because people can see, it's 10x from here, and at the same time, the value of my pounds has diminished by X amounts, destroyed by inflation. The question then becomes, why aren't I invested in this, rather than why should I invest in it? Lawrence Lepard calls Bitcoin a hedge against sovereign debt default, which I don't think is an unrealistic risk, given how heavily indebted so many countries are, and more importantly, what their debt service burden looks like. What other system can you point to that's had more than 10 years worth of continuous uptime? Not a single one. No bank, no telecommunications network, absolutely nothing. Bitcoin's just been chugging away.
Let's talk about Bitcoin policy, UK and FCA. That's kind of the topics I think what we cover mostly today.
Absolutely. I'm happy to sort of start at the beginning with the relationship between the UK's decision-making bodies and Bitcoin, if that's a helpful thing for your listeners.
Yeah, let's get directly started with that. I think we can directly start with that. What is the relationship between Bitcoin and the bodies there?
It's a little disappointing, to be completely honest, particularly when you consider the tradition of computer science and cryptographers in the United Kingdom. You might have thought that this would be a jurisdiction that would be excited to have a leading role in this area. Adam Back, of course, was originally a Brit. He'll be well known to everyone who listens to your show. And we've got a reasonably proud tradition as well. Tim Berners-Lee is another name that I might reel off. Our computer scientists have traditionally been among the finest in the world. And it's a shame that pioneering spirit doesn't translate into the way that the UK appears to make regulations or understand the protocol itself. We can dig down a little bit into some of what I think are the reasons why that has happened. But in summary, the general position of the United Kingdom towards the cryptocurrency space in general and Bitcoin in particular has not been a welcoming one. So back in the day, when the various different bodies first became aware of Bitcoin, the messaging was very much, this is a speculative asset with no intrinsic value, all of the usual buzzwords that you'll be familiar with. Perhaps it's helpful for your listeners for me to set out the exact bodies that I'm talking about. So in the UK, obviously, the central bank is known as the Bank of England. The HMRC, that I'll refer to as well, stands for His or Her Majesty's Revenue and Customs, and that's our tax body, the equivalent of the IRS in the United States. The FCA is the Financial Conduct Authority. Its predecessor was the FSA, the Financial Services Authority. They did such a bad job at spotting and preventing the financial crisis that they were essentially disbanded and then recreated as the FCA. And then we obviously have the Treasury Department, which does exactly what it says on the tin. And then the lawmaking body in the United Kingdom is Parliament, and that's split into two houses here. Like a lot of countries, we have the House of Commons and the House of Lords. It's a bicameral system, similar to the United States. And behind all of those regulatory bodies sit a civil service, which essentially is more powerful in some respects than the actual ministers and members of Parliament themselves, because it's the civil servants who really drill down into subject matter and decide policy. So that's a bit of scene setting, and we're not unique here. Most countries will have a similarly large set of different bodies who all do similar things, and unfortunately, the UK is relatively unique in having had a very, very sophisticated and well-established financial services industry. One of the things that United Kingdom has traditionally been famous for, going back a really long way, actually, if you go back as far as the Crusades, for example, the decision to split the types of ownership between legal ownership and beneficial ownership, and really the creation of trust law in its very earliest form was British, well, as it was then, Decision, and quite a fantastically innovative piece of legal thinking. Sadly, we're no longer as innovative as we were in the Middle Ages, and if we haven't ourselves invented something, there seems to be a lot of pushback in the United Kingdom against it. And so to this day, you will still get the official line coming out of the FCA, which is that Bitcoin it's a nothing. It's an electronic beanie baby, a speculative asset that has no use case, no intrinsic value. And a lot of the narratives from 2015 or 2017 are parroted and regurgitated. So, for example, we hear time and time again from the regulator, Bitcoin has no use case. And it's a little frustrating for people like myself who work in advocacy on Bitcoin, because you can demonstrate, well, yes, it does have a use case, and then you can list out some use cases and show video evidence of use cases, and then they will turn around and say, but Bitcoin has no use case. I don't know whether you find the same thing, but it's a very strange habit of mind, I find. You must have encountered the same kind of thing yourself.
Yeah, it's always. I think especially in the Western countries like UK, the European Union, United States, we kind of have the problem of the financial system for the normal person seems to be working fine. Like they don't get the problem really. They think the dollars come to the person. If I transfer it, it's fine. Most are not. Most don't have the problem of being unbanked. Like in Austria, we have like 99.9% of banking rate. Almost everyone that is in the age of having a bank account has a bank account, and even like young kids can get like a kids account and stuff like that. So if you go to Africa, if you go to El Salvador, if you go to other places, there you don't have to, or Venezuela, Brazilian, Argentina, like there's so many places like that, where you don't have to explain so much about the use case of Bitcoin, because here in the Western countries, I feel like it's perceived as something, if you have so much money, you can also buy some Bitcoin. It's for rich people. I heard that a lot. I heard also like, it's just like a speculative thing. And it all kind of stems from that they don't get the use case because they don't even realize how broken the monetary system is, how that inflation rate that we now have is just the beginning of it. And I think that's one reason why they don't get the solution, because if you don't feel the pain, if you don't feel the problem, you're not as open to listen to a solution, and people usually run towards a solution once they really feel pain, but then it's too late. Like that's a pain point. You want to do that before then. That's why I think it's always really important to educate your loved ones. So at least you can in your neighborhood with your loved ones, with your family, kind of get to a little bit of a better state and prepare for what's maybe to come. Like we don't know, like maybe there's like a suddenly phase where the monetary system really breaks down in a major way, like it has done in Argentina multiple times, in Venezuela has multiple times, in Europe, in the UK, America even. I mean, America is probably the last resort. It can happen. Like that's not out of the question. And I think that's kind of the problem that I see in educating normies, if you like to say like that.
I think you make an excellent point there in relation to what problems does it appear to solve. And as you've rightly said, if the majority of your population is banked already, and if they have very low payment frictions, which they do in most Western countries, and in fact, as we see in most of Western Europe, in the United Kingdom, our pay tech is actually superior to the United States. Everyone will tap and pay. Google Pay and Apple Pay are ubiquitous. We've been using chip and pin or tap to pay for a very long time here, whereas in the United States, you often will still see people swiping a credit card and then signing. So the pay tech functionality of Bitcoin is less obvious for regulators to understand here. And I think the second part of your point is that really hits the nail on the head there, because the problems that we are pointing out, which Bitcoin solves, the hard cap, the incapability of changing the monetary policy of the protocol, those are quite subtle points, and they're not obvious to your regular person in the street. Most of my friends don't work in fintech, they don't work in finance, they don't work in Bitcoin. And the interesting thing I always find around the 2% inflation target for most of the Western central banks is that is just high enough for it to be helpful to the government, but it's not quite high enough for people to be rioting in the streets. And the central banks actually have to perform this delicate dance, because if they push inflation up to a consistently high level, you get into quite obvious value destruction there. You must have you heard about the rule of 72? It's one of my favorite little tricks.
I, I,
It's
heard-
one of my favorite.
I think it's to calculate how much it devalues or something like that. I heard about it, but I'm not familiar with it.
Yeah, it's a neat little mental trick. If you take the divide 72 by the rate of inflation, and that shows you how quickly you'll lose half of your purchasing power. And in the number of years. So very rough numbers. If like in the UK, we hit 11% inflation at one point. And at that rate, you'll lose half your purchasing power in about 7 years. And obviously that problem snowballs and
Interesting.
exacerbates. In Turkey, for example, their
What do you
inflation rate
think
hit
is like
70.
an inflation?
Sorry, carry on.
Oh, I'm so super sorry. I think the internet connection is kind of lagging sometimes. It's now now we speak into each other. Then no worries. What did you want to say with Turkey?
Just that their inflation rate hit about 70%, which means that in 1 year you lose half of your purchasing power, and then it becomes very, very obvious that you don't want to keep your savings, what's your energy and your time. You don't want to keep that in your local currency anymore. And once you've reached that decision, then you begin to look at alternatives. And obviously, we know one of the fairly obvious alternatives, which is why we're on this podcast together.
Absolutely, yeah. And it's interesting how people don't get that simple thing. But what do you think is that's what I wanted to try to get in before. What do you think is the inflation rate that people actually wake up? Because we even have, as you said, in Turkey, a high inflation rate. We have in other places high inflation rate. And even there, the Bitcoin adoption is not like 50% or 100%. It's like way higher than we have in the Western countries. I think Nigeria is one of the countries that is leading in Bitcoin adoption, depending on what metrics you're looking at. But what has to happen? Like, how high has the pain to rise? How high has inflation has to be? And maybe also like what long of a period of time does that needs to be that people actually wake up and say like, oh, like, okay, euros is gone, US dollar, pounds, that is all for nothing. I really need to find an alternative. And will they automatically come to Bitcoin then, or will they have like stocks and ETFs and all their fancy things, maybe even gold?
Yeah, so I'd break that into two questions really. So what's the trigger for people looking at Bitcoin, and would they keep other investments in mind as well? And I think the answer to the second question is almost certainly yes. The key takeaway, if your local currency is losing value, is that you want to escape from it. And we're seeing people subconsciously do that across the Western world at the moment. Housing is a great example. And this arguably has been happening for 20 to 30 years. Australia's housing market is one of the most unaffordable in the world. In the house prices in Sydney, if you look at those, are almost beyond the reach of normal people at the moment. And the same largely goes for the United Kingdom. House prices here are extraordinarily high, both in terms of actual pounds and in terms of multiplier of average salary. And frankly, I don't know how people in the generation under me are going to be able to afford to buy houses at those astonishing prices. And one of the reasons for the move into housing is because it's perceived as a hard asset, which will retain value and grow faster than your local currency and faster than any rate of interest that would that your money would accrue if you left it in a savings account. So, and the English have always done this, but probably even for longer than 20 to 30 years, to be honest. So, I'm not a gold hater. I can see merits in. I can understand the logic for moving your money out of your local currency into gold at the same time. I think we sometimes forget, if we spend a lot of time talking to Bitcoin, is how new and strange it is to a lot of people, and frankly, how long it took some of us to understand it. Personally, I spent 2 years reading about it before I felt comfortable that it was a real thing and that it was secure and its monetary policy couldn't be changed. It takes a long time, and I'd be interested. I don't think I've ever heard your origin story. I don't know how long it took you to get across the line, but it took me a long time.
It took me 3 years from first hearing about it, first kind of getting interested in it, to get over the fact that Bitcoin is not a scam. So it really took me a long time to get out. Like, I was in a stock mindset. I was like really deep in this, like, okay, Bitcoin needs to have a cash flow. When I invest in something, I want to have a multiple on top of that. I was in that Warren Buffett kind of a mindset, and it treated me good. Like, from when I started investing till I got Bitcoin, I made really good investments with really great tech stocks. But because I made good returns on the stock market with picking individual stocks, and it was also fun for me, and it kind of solved my problem of inflation. I even saw inflation as good for me because my assets were rising. I didn't get the problem, or even like the problem was even like a feature for me. I was like, that's nice, actually. It gives me more purchasing power. So in that way, I really needed a long time, 3 years, to really get Bitcoin. And then was just like one weekend, and I told that story sometimes on the podcast, but there was one weekend where a guy where I worked back then asked me, "Oh, you're doing a lot of stocks, but what about Bitcoin?" And I talked with him, and he was not even in Bitcoin. Like, he was not a Bitcoiner, but he was interested in it. And he asked me questions and questions about Bitcoin, and where I kind of discovered that I don't know a lot about Bitcoin, because he was kind of looking at investing in it, and I was kind of like, oh, don't do it. So I wanted to prove him wrong and telling him why he should not invest in Bitcoin. And I was like, okay, if I want to take a big stand on Bitcoin, I have to do the same research that I do with stock. And I did before I invest in any stocks, I did like 30, 50, 60 hours just investing the fundamentals of that stock. And then on top of that, the financials of it. So like before I even looked at the financial statements of a stock, I looked at like, what are they doing? What use case? How can that grow over the next 10 years? And the same kind of principle thinking, I tried to get to Bitcoin, and I started that research on Friday. On then Sunday evening, I kind of came out of that weekend, and I was like, maybe Bitcoin is something. Like, maybe there's something behind that. And actually on Monday, right after that, I opened the Coinbase account, and Tuesday I ordered my ledger. Both I don't use anymore, but back then I used it. So yeah, I'm self-custody, by the way, from day one. I'm really proud to say that. But also it took me that one weekend that, like, okay, I really actually have to look it up. And I think it's not like that you need 2 years of research. If you have really an open mind, I think, and you really want to dive deep, you can do it in a weekend or like a week, depending on your previous knowledge. But then it took me over a year to gain trust in it. So like, I only invested like 1% of my stock portfolio in Bitcoin just to get some exposure. And then it took me a year to dump everything else. I slowly grew like 5%, 10%, 50%. And after a year, I had everything in Bitcoin. I sold all my other stocks. So that's kind of my origin story from the first time I heard it till all in. It was 4 years. So it took me quite a long while. But I'm still happy because when I look now back, I came into Bitcoin in 2020. Price was around, I don't know, 7,000, 6,000 when I first bought some. Obviously didn't buy a lot, but because I was like 20 years old, had almost no money and was not convinced of it. But yeah, then slowly grew and slowly I got into that. But yeah, I think it needs that moment of you need a really good reason to investigate. And for me, it was just to prove him wrong. And funny enough, he still is not in Bitcoin, but I am, which is really funny that the guy that brought me into Bitcoin never bought it. And I didn't see him for 3 years, but I think I have to text him soon to tell him.
Send him a copy of this show. That's really funny. I haven't heard your origin story before. Thank you. But that's you've said a lot of interesting stuff there. That's it's cool to hear how thorough you were in researching it, and I have a lot of sympathy with that. I would do the same when I invested in my pension stocks or in my tax efficient stocks. I would read the prospectus, I would read the offering document, I would read the Financial Times about what the company that I was investing in was doing, and so on. And that's what a sensible investor does. And I think the interesting thing that we're dealing with in this trying to straddle the traditional financial world, which includes the FCA as the regulator here, and the Bitcoin world, is that a lot of the people who are making decisions are of a similar age to me. So I'm in my mid-40s. The decision makers at a hedge fund or so will be a similar age, maybe slightly older, moving from my age into the generation senior to me, and all of those people have grown up in a world where everything digital can be copied at no cost. So that's their base case. They've all grown up in a world much like, so I slightly predate the internet. I can remember a world before the internet and a world after the internet. But everything that digital that I've ever used has been as easy as right click and save down. So whenever you send an email, there's always a copy, not only in your outbox and your sent items, but also on servers all over the place. So the basic mental model that everyone of my age and older has is that everything digital can be copied. We grew up in the age of Napster and LimeWire and Kazaa. Everything digital was essentially free. And so when you're trying to explain to someone with that mental model that Bitcoin is not like anything else digital they have ever seen, that's quite a quantum leap for them to understand. So I think it's important to understand the base case that they have in their mind, which is that everything digital can be copied for free. And then the interesting next step to take in describing to them, and I noted down something you said around you wanting a stock to have a cash flow, for example. That's a fascinating point on Bitcoin, because obviously one of the big criticisms of it is it's not cash generative. And if you're used to valuing a company on an EBITDA multiple, or looking at a hedge fund on an assets under management multiple, then again, Bitcoin doesn't fit your mental model. Why does this have value? And so it's actually quite an interesting conversation to have with an investor or with a regulator who has an open mind. They say, okay, well, yeah, those things are true. Bitcoin doesn't generate cash flows, and you can't value it on an EBITDA multiple basis. So, and also, but then exploring the ideas around why it has value. And one of the key ones there is that it is a digital commodity that cannot be copied. The code can be copied, but Bitcoin itself, a Bitcoin cannot be sent twice. You and I know that easily, but most of the people outside our sphere won't understand that. And then obviously you go into why can't it be copied and I tend not to dive deep into proof of work immediately, although proof of work is the answer. But talking instead around how the ledger is maintained. And that's an easier concept, I think, for these people to get. So obviously, you and I know, the Bitcoin's distributed ledger is kept on each of the nodes that are globally distributed and are running continuously. And it's relatively easy for someone in the traditional finance world to understand how that ledger is updated. So obviously, in the case of a normal distributed ledger, like in the case of, I don't know, a record of JPEGs on Microsoft Excel, you can Control C, Control V, you can copy across, you can immediately copy the entire file, explaining to them that the process of adding new transactions to Bitcoin's ledger is enormously expensive and imposes a gigantic cost on anyone, a miner, who wants to add a new transaction to that ledger. And that cost is expressed both in terms of hardware and in terms of electricity, and it's incapable of being forged. Once you get that light bulb moment across, that is an absolute key. It's a fundamental part for me in Bitcoin's value proposition. So you're dealing with something digital, which has all the advantages of something digital. You and I could send it to each other right now. We can transport value around the globe effectively for free, but that value cannot be forged or artificially replicated. Then I think you've got a bit of a wedge there in trying to understand, well, maybe this thing does have value. And then your value question is so what value would I put on a non-government issued, hard-capped monetary asset whose monetary policy cannot be changed, that cannot easily be replicated, that cannot be forged, and which can enable me to send value around the world in a completely secure way? And then your value proposition questions become very different. In fact, completely different from how you would value a company in the way that you described earlier.
Absolutely, it's interesting to make that argument, because that's one of the hard question that I still can't wrap my head around, because Bitcoin's potential is so big. It's like how do you, if you do it also with stocks, you're probably aware of that. You always try to figure out what's the TAM, what's the total addressable market of a stock. What can it maximum reach? And the best stocks are those who actually expand their own total addressable market. Now with Bitcoin, you can make the argument, okay, it's gold, it's digital gold, so at least 10x from here, that's the total addressable market. But it's not only gold, it's also a currency. You can use it as the pound, as the dollar, as everything like that. But then not only that, what are ETFs trying to do? ETFs are doing the same thing. They're just like saving financial energy. So you can then also calculate the ETFs in there, on savings account in there, and it's kind of hard to wrap the head around where is the limit to Bitcoin. Like, what is the total addressable market of Bitcoin? How do you approach that?
It's interesting you mentioned gold. That was, like a lot of people, where I started, and back in 2015, I'd been reading about it for a couple of years, and in 2015, I think the total market cap of gold, if Bitcoin had hit the equivalent market cap in 2015, it would have put each coin at about $330K US. So that was roughly where I figured the total addressable market was in 2015, and back then Bitcoin was trading at about $250 from memory. So there's obviously a bit of an asymmetric opportunity there, if you go on that back of an envelope calculation. And I still think that's probably the most plausible target for Bitcoin. From memory, it's now in the top 10 of all asset classes globally. I can't remember the exact ranking. And obviously there's been a bit of price fluctuation in the last few weeks. Gold, I think, is still the most realistic, but I think you're asking some more interesting questions when you begin to wonder, will Bitcoin begin to demonetize housing, for example? We've already mentioned earlier that certainly in the UK and in many of the Western countries, housing tends to be somewhere where, there we are. So we're number 8, top. And when did we ever take silver? I didn't realize that had happened. Excellent.
Yeah, it happened. It's actually quite a good amount of distance. Also, we are really close to Saudi Aramco. Also, so like that happened. I think even like a few weeks ago, and yeah, we are rising in the ranks. Saudi Aramco is not that far. Google is far. Amazon is far. And Nvidia, Microsoft, and Apple. But I always say, as long as Bitcoin is still not bigger than any single company, we are super early. And it will be at no time where Bitcoin is bigger than the 10 biggest companies combined. So like we have a long way to go. I just wanted to give you the context from what you mentioned.
Yeah, definitely. Well, just looking at that chart, it's roughly a 3x to be the second largest in the world. Less than 1.8 to overtake Apple at 3.7 trillion, and it's less than a 10x to hit gold. And certainly in venture capital terms, if you were to invest money into what would become a successful new venture capital company, let's say a tech company, a 10x is far from rare. And that's exactly the kind of thing that you would look at. It's exactly the kind of opportunity that Peter Thiel, for example, would have looked at when he was first investing in Facebook back in the very early days. So I don't think it's unrealistic at all to think that Bitcoin could 10x from here. The only thing I don't know is the time scale that would take. And that ties back into the wider understanding of what it is and what it does. And that itself ties back to what we were talking about early on in the call when we were mentioning what problem it solves. So, and I thought it was interesting you mentioned unbanked and paytech functions first. If you are in a country that has very poor paytech capabilities, then Bitcoin using a Lightning wallet is a fantastic option. And as you know, there are many other options such as the various eCash solutions that are being built at the moment, or Machankura, developed by a fantastic South African developer, which lets you send Bitcoin even when you don't have data availability. You can send it using SMS. Now, those are fantastic solutions that wouldn't have been built in Europe because we don't face the same kind of paytech frictions. The less obvious points around value destruction of currency, and I think this really zeroes into the value proposition here. Lawrence Lepard, for example, calls Bitcoin a hedge against sovereign debt default, which I don't think is an unrealistic risk given how heavily indebted so many countries are, and more importantly, what their debt service burden looks like. I'm most well informed on the UK numbers, obviously, but the latest figures from our Office of National Statistics show that currently the UK spends more money servicing its national debt than it spends on either education or defence, which is quite shocking. And we're at an interesting point in the sovereign debt markets where, and I think this is really BlackRock's investment thesis behind IBIT. They seem to be certainly the messaging that we're getting from people like Larry Fink seems to be perhaps you might want to consider a 1% to 2% allocation of your money into something that can't be inflated by governments in order to deal with their sovereign debt issues, frankly. I don't know if that accords with your kind of analysis or thinking on that basis. Interested to hear.
I partnered up with Coin Vigilante. This is the most beautiful Bitcoin timepiece that I ever saw created by anyone. Look at that beauty. I love it so much. Coin Vigilante made a perfect Bitcoin watch. That's the perfect, subtle, elegant way to go out there and show that you are a Bitcoiner. And that watch brand is Bitcoin only. And Coin Vigilante just dropped a completely new and amazing Genesis edition of their watch collections. You have the date of the first ever mined Bitcoin block in there? And of course also the block height and which epoch we are currently in. I love the level of detail they put in this masterpiece. And make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much. If you watch or listen to my podcast on a regular basis, I guess you already bought some Bitcoin. And now the most important step is to keep the Bitcoin. Keep them secure in a hardware wallet. My personal recommendation for hardware wallet is the BitBox. It's super secure. It's simple to set up. It's also a perfect gift for a friend who has still their Bitcoin on an exchange. And you can get a 5% discount with the code Robin at the checkout. Visit bitbox.swiss/Robin to get your BitBox. And the next step is to really level up your sovereignty as an individual. You have to have the most secure self-custody setup. You have to secure your own devices. You have to protect your privacy. You have to set up an inheritance plan. And depending on where you live, you even want to have a plan B, a citizenship where you can move in case something goes really wrong. And through all those steps, the Bitcoin way is guiding you through step by step. And if you visit thebitcoinway.com/partners/Robin, you even get a 30-minute free call to find out how you can level up your sovereignty.
Yeah, it's interesting. I think that I usually try to be really cautious when orange pilling someone and speaking to new people that didn't have any inputs on Bitcoin. And I usually use 5% as a target of like, okay, like if how I frame it usually is here is what I see Bitcoin is going. And I explain them my vision for Bitcoin and how it's overtaking the whole financial system. And then I ask them, okay, how likely do you think that is? And they usually go ahead and like, oh, it could happen like 10%, 15% or something like that. And I'm like, okay, if you think that with 50% likelihood it can actually happen, wouldn't it be a good and wise decision to put at least like 1 to 5% of your liquid net worth into Bitcoin? Like if there is a non-zero chance of that happening, you would benefit massively, even if you have a very small allocation. On the downside, you don't lose a lot if that actually goes to zero and it's a nothing burger. So, and with every year, that argument gets better and better, because like 10 years ago, that was like, okay, I just put like, I just invest like 100 euros or 1,000 euros in Bitcoin because it's so risky. But now we have publicly traded companies in Bitcoin. We have nation states in Bitcoin. We have the president of the United States being on Bitcoin conferences and talking about Bitcoin, even though I don't like how he talks about it, but that's another discussion. And we have all those amazing things in Bitcoin, where it gets harder and harder. Also, BlackRock is a big thing, especially for traditional financial people. We have more and more things of like proof that this thing actually can work out. So that 5%, maybe even better 10%, like the likelihood of Bitcoin succeeding over the long run and actually pulling that off, which I think 100% happens. That's why 100% of my net worth is in Bitcoin. But if you're new to Bitcoin, I would say don't jump in with all your wealth. Like I would never recommend to anyone that is just starting out with Bitcoin, investing everything right now in Bitcoin. That seems to be a stupid idea, because you probably are not educated enough to be convinced enough of Bitcoin to withstand the massive volatility, and the likelihood of you being shaken out with a minus 50% crash and then losing out on the 300% uprise afterwards is like really high. So like if you want to jump in a really cold lake, you check first if there's a stone. You check first how cold the water actually is. You should check out that lake before you jump in. So that's what I usually try to
get across. And by the way, because you mentioned Larry, and I think Larry is a really great guy, and I had him recently and actually on the podcast. Just make a small tip for people. It's under my 6th most popular videos. You can easily search it. It's a really great podcast episode, one of the really educative on how the fiat system will likely go forward in the next like 5-10 years. And by the way, I also heard that he's preparing a book. I'm really looking forward to that, because that could hit the mainstream really hard, but I have not read it till now. He just told me in Abu Dhabi about it. Will be fun. But yeah, sorry for that small tangent. I think it's really important that we are careful with our orange pills, so to speak. And BlackRock, Trump, and all those things are really good for us in our explanations. And I'm really looking forward also to the Christmas tables. I meet a lot of family members that I haven't met for a long time. It will be fun to talk about that, because last time I talked with them, Bitcoin was like at 30-40K. So it's almost a 3x now.
Well, I'd actually recommend that people listen to that talk with Larry as well. That's probably what I was thinking about. And I think his book is just finished. I believe he announced that today. So it's always interesting to hear people like Larry, who've got such deep understanding of financial markets and of sovereign debt, because I think people like him have perceived an issue slightly ahead of where the mainstream is going to perceive it. We've mentioned issues around sovereign debt and the difficulty that sovereign nations are going to have with repaying their currency. The obvious point to make here is, while I'm not an MMT guy, I do agree with some MMT theory, which is that a government which prints its own money can't ever realistically go bankrupt. So when you hear people saying, the US is going to go bankrupt or the UK will go bankrupt, that's not technically going to happen. If your debts are denominated in a currency that you can create, you can go and create in that currency forever. The consequence of that, though, is obvious to both of us and probably obvious to everyone who listens to your podcast. It's that the purchasing power of each unit of your currency decreases the more you print. So if you're dealing with your sovereign debt in that way, what you're doing is essentially a soft default. No one ever wants to do a hard default. If you go for a hard default, you lose all credibility on the money markets, and it's very, very challenging for you ever again to raise money on the international bond markets. We have examples of that previously. Argentina has defaulted in the past. Russia has defaulted. Greece came very, very close to defaulting during the financial crisis. And each of those countries have struggled subsequently to raise money on the international markets. And obviously, it's crucial for countries to be able to do that because of deficit spending. A country's deficit is ordinarily understood as the difference between what the government can raise in taxes and what it needs to spend in a year. And countries typically make up that shortfall via selling bonds, basically. I scribbled down something as you were talking earlier. The allocate around your allocation to Bitcoin. So I think we're on the cusp of seeing an interesting change which affects both the regulators that we were talking about at the beginning and also some of the money market investors that we've talked about subsequently, and that's around career risk. So the career risk for the FCA or for a regulator in terms of telling the market that Bitcoin is a safe investment is obviously still apparent. It's a volatile asset. The volatility may be the price of being early. And, you and I probably have a different opinion around that from someone at the FCA. But the key thing for the FCA person will be one of caution. Their career risk is such that if they come out and tell the market that Bitcoin is fine and then there's a 50% drawdown, lots of individual people will lose money. And they absolutely want to avoid that. And the same was true for most money markets and money managers until very recently. So you would go to an investment committee and say, I think we should have a 2% exposure to Bitcoin. You'd be laughed out of the room. But the conversations that we've been having in the last year, certainly since January when the ETFs launched, the question is switching slightly away from an instant refusal to consider Bitcoin and more of a question, should we consider an allocation to Bitcoin? So career risk, certainly for investors, has diminished. I don't think it's yet diminished for regulators, because they are obviously going to be more cautious and more keen to protect regular retail investors like you and I. But I think it's interesting that certainly in investment committees, we're beginning to see the question, why don't I have a 2% exposure to Bitcoin? And if you don't mind me going on a bit of a spiel here, you may have heard the story recently around the UK pension fund that has famously invested in Bitcoin. It's got some exposure in a fund. Now, their exposure was a mere 2%, so it was below the number you were talking about earlier. And according to publicly available information, they received very, very thorough advice as to the effect that a total loss of that 2% exposure would have on the aims and goals of the pension fund. And the conclusion that they reached, and this was supported by the model, was that if there was a total catastrophic loss, then it would delay the achievement of the pension fund's goals by a few months. However, if there was any upside at all, then it would reduce the period in which they would achieve their pension fund's goal by a couple of years. So, perfect. That's exactly the one I was thinking about. It's worth digging up some of. You might want to get the Cartwright guys on your podcast. Actually, they've got some very interesting information around their thinking, which they can disclose publicly. And
interesting.
Yeah,
interesting. I just want to put that also in. That's from CoinDesk. It's obviously a nice article about it, or like a rather nice article about it. But if you just Google UK pension fund Bitcoin, the first thing that comes up is like, a UK pension scheme has been branded deeply irresponsible after investing in Bitcoin. Deeply irresponsible. That's so funny how mainstream media like kind of perceives it, like financial advisors deeply irresponsible to include Bitcoin in pension. It's just really fun to see that. It's also good that like a neutral or a little bit of a positive article comes up. I didn't read it till now, but it seems to be like a good article. But yeah, I was laughing when I was seeing it, and then it's like Sky News deeply irresponsible to include Bitcoin, especially 3%. Like that's not. But it's a lot of money. It's 50 million pounds, $65 million. That's a good amount of money, to be honest. That's where I think the power comes if those big pension funds really come in, and that's just like one. And I don't know if it's in the UK like that, like in Austria, but we are forced to invest in pension funds. We cannot choose to not invest in pension funds. We have to invest in the pension funds, and you can only choose which provider you go with, but they all, at least for now, they kind of offer the same thing. I looked in all, like you have, if you're a self-employed company, as I started, you have 6 months to decide, and if you don't decide in these 6 months, you get randomly assigned one. And this was like 4 or 5 providers, and I looked at all of them. None of them had Bitcoin, and all of them had kind of the same thing. And I was looking at them like, I will not decide, because how can I decide between 4 apples? Like, it doesn't make sense. But the career risk is also interesting, and maybe you can talk about how this is in the UK with the UK. Is it actually in the UK before that? Is it in the UK also like that you cannot opt out of the pension fund? Do you have to invest in a government subsidized pension fund?
It's similar, but not directly the same. So there are new laws that came in a few years ago, which now require all employers, so all companies, to have a workplace pension for their employees. So it was perceived correctly that not enough people were saving for their retirement, and so there was a big drive a few years ago to ensure that people had workplace pensions. And typically those will go into one of a small number of providers. So not dissimilar to what you were describing in Austria. Just before we move on from that cart ride one, though, I do take quite a lot of issue with those headlines. The idea that the fund was deeply irresponsible. I think that's incorrect in terms of fact and also in terms of opinion. So in terms of fact, I do know from publicly available information that the fund spent over a year researching that decision. They got professional advice. The upsides and downsides were modeled. And you have to remember that these pension funds have trustees and they take their fiduciary duties and responsibilities very seriously. They are managing the money for people at a crucial time of their lives when they're no longer able to earn money. So a pension trustee will typically be very, very thoughtful around their fiduciary responsibilities, and rightly so. And I know that they spent a long time taking professional advice, looking at the models, and as we've talked about, there seems to be a low downside and a high upside. In other words, an asymmetric return. And they expose themselves to that asymmetric return at, to my mind, an appropriate percentage allocation. So, both in terms of fact and opinion, I think they acted entirely responsibly. You and I, we both invest personally. All investments carry an element of risk, and your job as a manager of money or an allocator of capital is to make as educated an assessment of that risk as you possibly can, with the knowledge that all risk carries with it certain downsides. I don't think it's fair to say that they acted responsibly at all. I think it's if they'd had a 3% allocation to Scottish mortgages, have you come across them?
No,
So I did in my former life. I was a sort of an M&A and venture capital lawyer, and I did a lot of work for a fund called Baillie Gifford, and one of their famous funds that they manage is Scottish Mortgages, who have had a fantastic track record. But one of the specialities behind Scottish Mortgages was investing in very early stage tech companies. So they invested in Spotify, in Skyscanner, in Home24, in HelloFresh, in Rocket Internet, which is based out of Germany. So all manner of different, very high growth tech companies, and some of those performed fantastically well. Some of them haven't. But if a pension fund were to buy a 5% allocation in Scottish Mortgages, to my mind, that's arguably more risky than investing in something like Bitcoin. So I don't think it's a fair categorization to say that they were reckless.
It's absolutely not fair. And it's, we kind of are in this moment in time where if we disagree with someone, we kind of slander them, we hate on them. I see it online, but I also see it in professional newspapers. Calling someone deeply irresponsible with the thing that you described it perfectly fine. It shows that they're either out for clicks or really like hating on him, and it's probably a mix of both of them, because it's definitely not deeply responsible. They can disagree with the move. They can say like, oh, like I wouldn't have done it, but like calling someone deeply irresponsible is honestly a very hard thing to say. It means if we go to the definition of law, there's always like, if you act in a responsible way or deeply responsible or a little bit irresponsible, and then it depends on what you did. To act deeply irresponsible, you just done it because someone told you, like like Bitcoin is a good thing. Okay, let's throw in 3%. If they didn't do any research, if they just like, oh, like, let's do that, no models, all the things that you described, then it would be considered irresponsible. I don't know about deeply irresponsible, but definitely it would be irresponsible to just throw in money in something that you didn't research. That's always irresponsible, no matter where you throw it in there. But if you have done the research and you came to a conclusion, and many other people came to the conclusion, like they're not alone, like MicroStrategy, a nation state, Donald Trump, like Eric Trump said in Abu Dhabi, Bitcoin is going to 1 million. Like it's not a new thing to say, to like invest a little bit into Bitcoin, not even from the disagreeing standpoint. But yeah, I fully agree with you here. And also one thing I want to touch on with you is the what you said with the career risk and people being silent about it. I talked with Joanna Kotar, till a week ago. She was the only one that spoke out for Bitcoin in the German parliament. Now the finance minister also joined the game.
Yeah, I saw that.
He joined it just recently. And I spoke with her, and she said there are many more German parliament members that really get Bitcoin and really like it, but they're not speaking out because they are part of a party system, and they're not allowed to because the party policy says no Bitcoin. And they would risk their political career by being thrown out of the party if they are all of a sudden vocal about Bitcoin. So you cannot do it without the party. And I guess the same thing is true for across all industries, politics, CFOs, UK pension funds, and all the things, because you get a risk in there. The financial risk is not there with Bitcoin. It's more the career risk. Do I lose it? And that's why we don't have an Apple or a Google or an Amazon in Bitcoin yet, because the people that decide that might get fired if they do that, if they actually go forward, because they're like, oh, like what are you doing? Like, why do we need Bitcoin? So that career risk is still there. And I wonder, and maybe you have some opinion on that, I wonder what does it take to flip that career risk? Because at some point I think the career risk will be, oh, you still don't get Bitcoin? Oh, you still don't have a Bitcoin strategy? Oh, sorry, we need a new CFO. You as a politician think Bitcoin is bad? Like, I'm not voting for you. You obviously don't get it. So, like, what has to happen that we kind of flip that career risk thing on its head of like, it's all of a sudden a career risk to not be into Bitcoin?
I hate to say this, but largely because I hate talking about the price of Bitcoin, but I suspect that the price is the easiest way of communicating the potential up and downsides. So again, using the pension funds as an example, you said it was unfair to call them, irresponsible or reckless, and I agree. And if the critics had categorized what the pension fund has done by saying, their risk tolerance was clearly higher than mine, that I think is a perfectly fair statement. If you have assessed the risk of what it is that you're going to be putting your money into, and you decide that your risk tolerance is at a certain level, other people's risk tolerance may be lower, and that's fine. I'm a Bitcoiner, you're a Bitcoiner. If the pension fund had aped all of their pension fund into Bitcoin, that, ironically, I would have said would be relatively irresponsible. Not least because pension funds have got payment obligations as well. They're not just a fund that sits there. They have to make payments out for the people who are already drawing their pensions down. And as such, they need to have predictable outflows, so that they know exactly how much things are going to cost them, within certain parameters, and they need to make sure that they never need to be a forced seller of the assets that they hold. So if there's a sudden, and this is quite a simplistic analysis, but if there's a sudden drawdown in price, they don't want to be a forced seller of assets in order to meet their ongoing obligations, and that's just elementary balance sheet mathematics. Something you mentioned about why do we have an Apple, or we nearly had a Microsoft, but I think the interesting thing there is that the shareholder vote in December was following the recommendations of the board, and you'll know as well as I do, the majority of stock in these very big entities is now held by, frankly, things like exchange traded funds, and predominantly all ETFs, who hold a huge chunk of Microsoft, will have a policy that they always vote in a shareholder vote in accordance with the instructions from the board. And the Microsoft board had recommended a no vote to the consideration of Bitcoin on their treasury, and therefore all of these passive investors voted along with the recommendation of the board. And that's entirely normal. And one of the reasons why personally I felt that was a bit of a non-story. I know everyone got really excited by the Microsoft board vote, Microsoft shareholders voting no, but all it takes is a little bit of understanding around how votes ordinarily happen in publicly traded and listed companies to be able to predict that was going to be a no vote anyway. I think, back to your original question, if Bitcoin's price trajectory continues in the way that it is, that draws more people in to try and understand why the price is increasing. And then you get back to some of the things we talked about at the beginning of the pod around the fact that it's a hard capped money whose ledger can't be easily updated, which is beyond the control of any nation state and effectively isn't someone else's liability. People often say, what's Bitcoin backed by? And my view is it's not backed by anything at all because it's not a liability. We, in our mind, we in the same, much the same way as we were talking about with copyable digital assets like pictures on your desktop, we all have in our minds this idea that money needs to be backed by something, but that's because all of our money is a promise. It's whether it's a banknote that you hold in your hand or the numbers that you see when you open your banking app. All of those are promises to pay, and Bitcoin is not a promise to pay. It's much like gold, really. It just is, but it's a digital asset, not a physical asset, and as such, it doesn't require any backing because it's not a promise. It is the thing itself, and so I personally get quite irritated by people fussing around whether it's backed by. But I think, that's quite a long-winded answer to your question. But I think the first thing that draws people in is price. And if Bitcoin 10x's from here in the medium to short to medium term, then you're going to get a lot more activist shareholders saying, why don't we have exposure to this? That's the point at which the career risk flips, because people can see, it's 10x from here. And at the same time, the value of my pounds has diminished by X amounts, destroyed by CPI and by inflation. People are going to then, the question then becomes, why aren't I invested in this, rather than why should I invest in this?
I fully agree with that. And I think the price, people often say like, oh, we should not focus on the price, but it's for me kind of a scoreboard of how bad the fiat system is doing and how quickly it gets adopted. So it's in a lot of ways a fair assumption, to be honest, to look at the price for the overall long-term health of it. Obviously, it should not be the only one, like hash rate and other metrics should also get into that. But the price is something obvious. And honestly, it's sad that we didn't have that in the internet adoption. How amazing would that be? Because the internet adoption didn't have, like the TCP/IP protocol didn't have a native token. There was Apple, there was Microsoft, there was Amazon, and you can kind of track the Bitcoin adoption with them, but it was not directly. Now we can directly track the Bitcoin adoption in real time with a tool. And yes, it's bad because it's not only tracking the adoption of Bitcoin, it's also tracking how bad the US dollar or the euro or whatever currency it is doing, because they're debasing it and Bitcoin gets adopted. So like the price has two factors of driving it, that the rate of monetary expansion of the central bank, plus people getting interested in Bitcoin, plus people that are already interested in Bitcoin getting more exposure to Bitcoin, getting from 5% to like 50% in there. So that's super interesting also to look at from a price perspective. So, and it's the thing that most people are interested in. I have a Bitcoin audience. If I put something with price related on, maybe not even the price, like just something that hints on the price, people click on that more, people are interested in that more. It's just, we want to know where this thing is going, and we want to also benefit from it. That's the incentive system in in our brain. Like, that's the beauty of Bitcoin, to be honest. It incentivizes everyone to root for freedom, to root for that freedom grab technology, and I think that's kind of a beautiful thing. And yeah, price. It's sometimes annoying when normies reduce it only to the price, but it's understandable from a human society, from a human psychology standpoint, I think.
Yeah, I completely agree. I don't know. Have you seen that old movie, Close Encounters of the Third Kind?
Close? No, I never heard about it.
It's an early Spielberg film. So in the movie, there are these aliens, and they can only communicate with us by playing 4 or 5 notes on a synthesizer. And obviously, they can't speak our language, and we can't speak theirs. I often feel that the price is the way that we have to communicate with normal people. There's a lot of other stuff going on in Bitcoin that would be nice to talk about, but the price is the easiest way to get that message across most quickly. And in monetary economics, that's not a bad thing. The market price is extraordinarily useful, as you've very clearly described there. It's very useful in establishing the value of what is going on. And your example of TCP/IP is a great one. If there had been a ready marker to show how valuable the internet was going to become, then being able to track it in real time on coin market cap would have been fantastic. I love that example. It's a really great idea.
I usually try to because people always say, "Oh, there will be another Facebook. There will be something else that Bitcoin will be replaced by," and they always bring it back to the protocol level, because Bitcoin is not an application, it's a protocol, and protocols usually don't get replaced. Protocols usually stick around for a very long time. The same with the TCP/IP protocol of the internet. We have it since the beginning. It has some changes, of course, along the way, as has Bitcoin with hard and soft forks. But it will carry on, and we might as soon have a new internet. But that's a whole nother discussion. With Bitcoin, because it's money and it's moldable, and we can, if we find a mistake or we find something that we have to upgrade and it's life threatening to Bitcoin, we can actually do that. I don't know if Bitcoin ever will die. Like, maybe in 1,000 years, when aliens come and they have a better form of money and they force their monetary policy on us, like, those things might be possible. I don't know, but it's hard for me to imagine a better form of money, because it's already digital, it's moldable. We can, if we find something, we can in an emergency actually modify it. And yeah, it could be, I don't know if it actually will be, but it could be the final form of money for a very long time. And money is usually for a very long time around. Gold has been for so long already, so dominant in the space. So I don't know, how do you see it? Do you think that Bitcoin has a fair chance to be the money for the next thousands of years?
Eventually, I think it has a fair chance. I mean, a number of Bitcoiners that I respect a lot say, Bitcoin is a tool, and we don't have any particular religious affiliation to it. It is a tool that at the moment functions in the best way possible for discharging of its functions. It still needs to be improved. It's not hit its perfect form yet. We need to work on other layers on top of the base layer protocol. And if another better form of money did emerge, then we would adopt that, because what we want is a sound money, and we want the best form of sound money. It's interesting thinking into the far future. There some papers have been done on block latency if we become a multi-planetary species. So it would be challenging, I think, to use the same money on different planets. And obviously this is getting into very far future science fiction. But I don't think block time, I can't off the top of my head remember how many light minutes Mars is from Earth, but I don't think Mars sorry, we've gone on a proper tangent here. I don't think Mars, Mars and Earth, I don't think could use the same blockchain because of the time period to communicate information between the two. So you might need to use some form of e-cash, which would then settle once you were able to write transactions to the main blockchain. Some interesting papers have been written on this in various thought experiments. But that's that's a bit of a tangent away from our original conversation.
But it
yes,
shows sorry to interrupt, but I think it shows how great Bitcoin already is, because all the things that we can imagine that bring Bitcoin might down is, but what if we cannot use it on Mars? Or hey, like we go so far out in thinking of a risk association with Bitcoin, and then when you assess the risk of like real estate, assess the risk of like anything else, like a stock or something like that, you have so normal things that could be risk. With Bitcoin, we go all out in the craziest things, and we're like, oh, like that could be a risk some point. So I think that speaks to the strength of Bitcoin. And yes, there will be probably a solution once we get to Mars, and once there is let's say a good amount of other species or human beings on Mars that it makes sense to settle with them. Like right now, if there are, I don't know, 2,000 people on Mars, they can have their own currency, they can have their own systems. It doesn't really, like, we don't need to build now complicated systems to settle with those 2,000 people. If we are like at that point probably like 10 billion or something like that. But long term, I think we probably find some sort of solution where we can settle with those other planets, or we find an amazing solution that we can use on Earth and all the other planets also. And then, yeah, we kind of have to maybe step down and say the same thing that the gold crowd now has to do, saying, gold was great, gold is great, but it's not ready for the digital life that we have now. If before digital life, before internet, before the electricity, everyone would have said like, oh, of course, like gold is the thing, like gold is the money, like why would we ever need something else? But then the internet came around, electricity came around, and now we need money that is instantly settled between Austria, America, Australia, Africa, India, UK, and you can send one transaction through to all those countries within a minute, and it costs almost nothing depending on how you do it and stuff like that, and how the fee structure right now is. But right now, fees I think are really, really low. So we need that kind of money now, and gold is not viable as money still, not now. So maybe there are things coming to Bitcoin, coming to our Earth, coming to our systems that will make Bitcoin look like gold right now. And then Bitcoin maxes kind of have to step down and say, there's a new kid around the block. But the one thing I'm saying right now is, this is far out in the future.
Yeah.
This will not happen tomorrow. And none of the altcoins fulfill any of those criteria, just to be very clear.
Fairly silly point for me to make, but there's not a huge amount of commerce happening on Mars right now. So there's not a there's not a huge demand for an uncensorable digital money there. And it's funny that, talking about the long-term future, that was where my mind immediately went. But I think it was because I was remembering that interesting paper around exactly how long it takes for the information to be transmitted so that it can be written to the base layer again. And maybe the last thing around resilience, obviously the architecture of Bitcoin is not dissimilar in some ways to the architecture of the early internet, ARPANET, which was designed to withstand a nuclear strike. And maybe sort of as a nice way to wrap up is Satoshi himself said that, we know that distributed systems are resilient and hard to shut down. Napster was obviously capable, which I mentioned earlier, was shut down successfully, but Pirate Bay and Gnutella, BitTorrent are much harder to stop. And it's that element of resilience, and maybe looping this all the way back to to either a regulator or to a capital allocator asking why does Bitcoin have value, no small part of its value is in the extreme resilience of its system, both to change and to interruption. What other system can you point to that's had more than 10 years worth of continuous uptime? Not a single one. No bank, no telecommunications network, absolutely nothing. Bitcoin's just been chugging away. And as far as I know, I think it only had 2 tiny periods of downtime in the preceding 5 years before that last shutdown. That's an extraordinary record.
Yeah, it's the best. Any cybersecurity guy that looks at Bitcoin is stunned because they know that no system is secure. They know that everything has downtime, and then they look at Bitcoin and are like, what? Like, how many years no downtime? Like, how is that possible? How it never been hacked? Like, how is that possible? So, Bitcoin is extremely unique, and we didn't cover as much of like UK and the FCA as I planned to, but I think it was a great episode, and there's a lot of room to discuss for a second round with you along the way. Is there anything you wanna? Yeah, is there anything you wanna add? Anything that is really important before we come to the end routines?
I think perhaps just noting on the general themes. We haven't talked about the specifics of regulation in the UK, but I think we've covered a lot of the reasons that people struggle to understand it, and that's true both of the regulators and our politicians, and also of capital allocators in the UK. So, if nothing else, I think personally that was a useful exercise for me in running through those ideas. And if you did want to chat again in the future, we have a couple of pieces of feedback that Bitcoin Policy UK is working on at the moment. One in relation to CARF, the Crypto Asset Reporting Framework, and another piece of feedback that we're drafting for the FCA, which we'll be submitting in March next year. So perhaps when those 2 pieces of work are done, we can have another chat, and I can run you through some of the detail of those 2 pieces of work that we're working on at the moment.
Absolutely, really cool. I'm looking forward to having you back on in 2025. For people that watch that, probably it's weird because I think this episode will come out in 2025, in January, early 2025. so I will have you back on in the same year, because today is the 20th of December. I pre-produce a lot of podcasts because actually tomorrow is my last recording day, and then I'm up to Miami and will be gone for a few days. Will be really cool. And yeah, we have one question that I asked each and every one of my guests, and that is, what can we learn from you besides Bitcoin?
I love 80s action films and bodybuilding. So I'm like I mentioned, I'm getting older, like all of us, and I'm really keen on staying as fit as I can, as long as I can. So possibly staying fit into middle and old age, perhaps.
Really cool. Yeah, it's I love that. Yeah, like old movies and bodybuilding. Then you probably know Arnold Schwarzenegger, the guy that I'm always compared to.
Well, he's a great man to be really compared to, Robin. You should be proud.
Yeah, absolutely. He has achieved a lot in his career. It's also really motivating to see his work. Even though I'm not as familiar with what he's actually doing right now, I think people assume that I'm a super fan of him, but I'm actually not. I don't know a lot. I saw that he's in some Santa movie now.
Oh yes.
It was
he is. It's funny you mentioned him. I watched Commando with my girls last weekend. I've been waiting. They've been too young until recently, but if you've never seen Commando, strongly recommend it. It's absolutely hilarious. One of his best and funniest films. Absolutely wonderful.
He has produced some really classic movies. They're really cool. Perfect. Then we have the end routine in the podcast. It's a big question. I think we can make a whole podcast out of this question. The question from the previous guest is, how will the world be different in 10 years from now because of Bitcoin?
I would hope the world would be a freer place because of Bitcoin. And the reason I say that is because one of the reasons I'm most excited about it, and why I find my work in it most interesting, is the ability that it gives to dissidents and freedom fighters and those who want to push back against oppressive governments everywhere the toolkit and the power to continue their work and to ensure they can keep making payments and to remain effective. So I'm hoping the world will be a more free and equal and therefore a happier place as a result of Bitcoin.
That's a beautiful way to end the podcast. Thank you so much, Freddie, for being on. Before I let you go, where can people find you, ask you questions, and reach out to you?
Fantastic. So the best place is on X or on Twitter, and my handle is easy. It's @FreddieNew.
Really cool.
Thank you so much for having me on. I've really enjoyed our chat. That was really fun. Thank you.
Thank you so much also for your time. Also, thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye.